Good morning, traders. It is 8:02 Chicago time, although I'm not in Chicago. Thanks for joining me. I am back. I'm back, baby. It is Monday, the 26th of February, 2024. This is episode 26 on February 26th. Um, Again, thanks for joining me. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So, I got quite a few comments on the last video uh, asking why I've suddenly disappeared. Unfortunately, there's no way for me to notify you if you don't follow me on Twitter or if you don't watch the last video in which I announce when I'm going. I generally talk about any changes to my schedule couple days in advance. But I was off with the family. My kids had their winter break, so we were in San Diego, and then we stayed at a resort in Tucson, Arizona. Never been there before. Very interesting. Okay, so let's get down to business here. Here's your conversion trading pre-market summary sheet. The overall stance of the market is mixed. You can see that the S&P is only 3 points up from Friday's settlement, not closed settlement. The Nasdaq's up 22 points. The Russell's down 1.4 points, and the Dow's up 9 points. Eurostoxx 50 down 8. The DAX up 13. So mixed bag. Crude, which fell I think over $2 on Friday, is unchanged basically. Gold also basically off $7.60. And then we see silver and copper falling. Bitcoin has breached the $50,000 mark and is holding steady. Ether catching up today, up 3.57%. As far as earnings, we did get Li Auto this morning. Li Auto generated 5.8 billion and reported 30 cents versus 29. And then we have Fidelity National, which generated 2.51 billion, reported in line. Nothing really crazy there. We do have Workday after the close, and we also have Zoom. Workday 1. Workday is 1.9 billion, 1.918 billion in revenue, and Zoom's 1.131, just so you have an idea of their size. What's on the news? What are the themes? Well, Fed's Waller on Friday came in and said that data has reinforced the need to verify inflation progress, that the data since the January meeting has been somewhat lacking, and that there is no, it reinforces the view that there is no rush to cut rates yet. And this sent the market tumbling, it looks like. And that's basically the theme. We're in a monetary policy regime. And so, these guys say jump. We all say how high in the markets. And that's what we've got. Natural gas hit record lows on Friday, settled at like $1.51. Can you imagine? Man, that natural gas was at almost $12. $12 2 years ago at the beginning of the Russian incursion into Ukraine. $12, and now it's trading almost a tenth of that. There was a rush on how we're going to get natural gas to Europe, which was dependent on Russia, and now that market is flooded. And this shows how the world can increase capacity on demand for natural gas. It's up this morning 6.3%, quite a trade, pretty nuts. The biggest thing this week we have going for us is PCE. This is the key release this week. It comes out on Thursday. You're going to want to pay attention to it. PCE on Thursday is expected at 8:30 Eastern, 7:30 Central. We do get GDP on Wednesday. This is the Q-on-Q second estimate. Nothing really significant. Durable goods on Tuesday. We do have inflation this evening. So, as far as what's happening here, we will get new home sales from the U.S. today. We have Dallas Fed. We have ECB's Lagarde at 11. The inflation number out of Japan is really important. Forecast is 2.1%. The prior is 2.6. And then we have Fed Schmidt this evening. So there are a lot of Fed speakers, by the way. We have Fed's Bar tomorrow. We have, let me see, Fed's Bostic, Collins, and Williams on Wednesday. These guys are all going to come out and give us their opinion. Thursday, Fed's Bostic, Goolsbee, and Mester, as well as Williams. And then on Friday, we have Fed's Waller again, Fed's Bostic, Fed's Daily, and Fed's Kugler, all coming out. So just, keep your news feed open this week. It's going to serve you, I think. So that's that. S&P is in a multi-distribution auction, which means there's some price discovery going on. The volume is pretty lackish, 136,000 contracts. The inventory is 48% short. The range is 20 points, which is pretty decent. It's right in line with the mode underneath. See the mode here for the overnight session, so it's pretty much in line. And the point of control hovering around 5104. Let's take a look at what we've got here. So all in all, we broke higher. So let's look at the bigger picture here. Let's look at a TPO chart. Couple of things, significant things to point out today. Okay, so we put in this high at 50.66, right? And we gapped down, and we pushed up. We could see that the market gapped down, and we pushed multiple days, pushing higher and higher and higher back into that acceptance area. If you recall, right before I left, we were talking about this 50-40 being a key retest area, and it got that the Thursday and Friday before I left. And then we put a balance point right around the 50-40 on that Friday. And then, so this Friday right here, we get right on the balance point from these 2 days at 50-40. And then we gap down again, we attempt higher, and then we push lower. The next day we carry the value lower, so the market's accepting lower prices below the 5,000, and then Nvidia releases, and we get this massive gap, huge run, and a couple things to note. So let's zoom in on these 2 days. These are very important days. So let's break up and see what happens here. Remember, the prior high is 50.66, okay? I'm going to just round it to the handle. I'm not going to talk about halves and quarters and 0.75s. Just let's be big boys and talk about handles. So we could see here that it opens, it attempts to push lower, and what it does, it extends higher, and it has a range extension higher. It does test and retest that prior high of 50.66, comes back to 50.67. So what we have here is what's called an excess low right in here. So this is important. This is really important support right here. So this is your intermediate term support. And then what it does is it creates a double distribution last Thursday, and it pushes into 5107.75, and it pulls back a little bit and rests. The next day we gap up, we check higher, and then we create another double distribution on Friday, and we pull right back into basically what was Thursday's upper distribution top. So let's take a look here at what I'm talking about. So now we're going to break up the letters, and we're going to see what really happened in here. Just expanding this, expanding, expanding, expanding. Let's move this over. So there it is. It's, let's fatten this up a little bit. Let's go 10. Okay, so we see that, we have A period, opens, tests down, tests up. B period is an inside period. C period attempts to break down. It actually gets a range extension down on B period, but also has a range extension up. D period gives us a double bottom right here at 50.67, and that's basically the top of your excess. This area here is very important. On our price map, this 50.67 is really important because it's the prior high at 50.66.50, and then we have basically the top of the top of the excess low at 50.67. So if you don't have this on your map, then you really need to make sure it's there. So we break higher, and you could see pretty decent break. C, D period's weak, E period extends, F period is slightly weak. So this is kind of a very grindy. I wasn't here, but I can tell from the way this profile is showing that this was a pretty grindy move. So you could see here, push up, pull back, leaves a single print, one single print, pushes up, pulls back, and then what it ends up doing is it ends up putting in a double TPO high at 5107. So that's a relatively weak high here. And it creates this double distribution. The bottom of the double distribution is 50.92, right in here. Okay, this is another area we need to pay attention to, because this is the lower end of the double distribution, and we have these double TPO highs. So that's how Thursday finishes up. It finishes up below 5100, with the market basically finding balance between 5108 and 5092. Again, 5108, 5092. Now let's scooch forward here a little bit to Friday. Friday, same kind of thing. A period forms the entire IB, so we get a lot of business going on in the first half hour. The second half hour is pretty weak. Then C period breaks, but it breaks down, and then rechecks the A period low, and leaves a one TPO single print at 51.12.50. So it's weakish, but not really. It's weakish, but not really. Okay, and remember, the prior high is 107.75, which we push through. And then what we do is we create two distributions here. We create an upper distribution right there, and then we create a lower distribution right there. And what coincides here is, you remember that 50.92? Remember that 50.92 here? See how that's operating? That's going to be your immediate initial support right now. This is a key area, and it's another excess. So what the market has generated is another excess low. But it created a weak high, which was taken. Remember, we always look for weak highs to be taken. Okay, we created a weak high, and then we pushed through the weak high in the overnight session because we gapped through it, and then we retested it from above, and so on and so forth. And so we end up with two distributions. So we have 51.12 to 51.23 as the upper balance. We have 51.11, you could say 51.12, down to 50.98-ish, 97-ish for the lower balance. And then we have this kind of balance point between Thursday and Friday, which goes down into 50.92. So this is the entire field right here, about 51.12, 51.10, down into 50.92. And what we're doing today is we're opening right on top of settlement. So we are unchanged. And so what the market has done is it has pushed forward. It has made gains, and now it's digesting those gains. In other words, the market is now in a condition where it's seeking balance. It's actually seeking balance. It found an excess high at 51.2350. It has put in an excess low down here between 50.52 and 50.67, has created two distinct and clear distributions of balance between 50.92 and 51.10, 51.11 or so, and now we're opening in that 5100 area. So you tell me, before I say something, you tell me what this should set your expectations to. What do you expect this will mean for you today and going forward for this week? What does this mean, knowing that this is what happened? We could see the two distributions. We could see that the week high was taken. We can see that the market has tried higher and has tried higher and has put in a bit of an excess. The excess is right there. Bit of an excess right there. So it opened, pushed up, rejected that, came in, rested in the middle, and broke down. This means that it's going exactly, guys. See, you've been paying attention. I'm very proud of you for paying attention. So the first thing we know, especially those of you who are in the accelerator program, the first thing we've identified is the market is likely to be in a balanced condition. The market is in a balanced condition, most likely, but that we don't know what the day has to provide, right? So what we're looking for today is most likely an extreme test, a test of extremes back to balance situation. So what that means is we're going to likely experience false breakouts as the market tests and checks the extremes of either side of balance. So I'm going to look for conditions to short 51.10 into 51.12 or so. I'm going to be looking for conditions to get long anywhere between 50.96 and 50.92, depending on how it behaves. This area, looking for it to come back to balance, and I'm looking for the market to confirm and reaffirm that the balance point, the equilibrium price, given all inputs, everything that's going on in stocks, everything that's going on fundamentally and so on, is accepting these prices at 5100 essentially. And we extend that to 5110, extend it down to 50.92. That's the sweet spot. So if you're going to dance in that square today. You don't dance outside the square, right? Now, if I'm wrong, that's okay. I like being wrong because what it does is it creates an even better opportunity, usually a stop out, but it creates an even better opportunity because it means that it's not seeking balance, it's still out of balance, and that means the moves are likely to be exaggerated because the expectation today is for consolidation and bounce. Remember, we built an upper distribution all the way up to 51.12.50. We have a single print here, we have an LVN, and if we break into that upper distribution, then the excess up here is going to be vulnerable. is going to be vulnerable and 2350 is likely to go. If we break below the 5092, what that does is it attacks the weaker structure and brings us right into 5082, which gives us about 10 points, and then drops us into this lower distribution that was created on Friday. I expect the extreme of that lower distribution to be 5066, 5067. And that's pretty much our price map for today. Do you follow? See how beautifully this kind of plays out? It's not beautiful while it's being formed, right? It's like making sausages. It's not beautiful while it's being formed, but you can see after the fact that it's how it's presented. So with that being said, let's take a look at the bigger picture of what we've done. We've really created an MC that goes way back to the beginning of the month, right? From February 2nd all the way through to last Wednesday. We have a lot of overlap, and that overlap has a point of control down here at 49.76. That's your equilibrium point for this profile, but you can see this profile is pretty jagged. It's got a lot of it's a multi-distribution profile, which means pretty active price discovery, pretty active push, acceptance, push, acceptance, push, acceptance, and then we finally break out, pull back slightly into 50-50 and finish strong on Thursday, and then on Friday we push into the excess and come back into Thursday's upper distribution. So overall the market, the bigger picture market condition is bullish. The intermediate, the daily market condition is bullish, but the overall market condition in that how value has moved is balanced. Okay, so that's how this is setting up. NQ, same kind of story, but the NQ didn't really do as well. You'd expect NVIDIA to really push the NQ around, and it did. It caused it to bounce through and gap up. So we have a huge gap zone beneath us. Let's adjust this a little bit. We have a huge gap zone beneath us right here, 17,864 to 17,542. Pretty big area here, 320 points or so in a gap. And then what we have is a lot of overlap. So you could see again, the NQ created two distributions, right, with weak structure in between. Very weak structure in between. And then on Friday, it created this excess into 18,144. So 18,100 is this key area now that under which we contain most of Friday's balance. So the NQ has this balance zone. It has an excess at 17,962, and it has this fat balance that we're opening in the middle of, which is held at 18,000 basically. See this volume point of control at 18,010, and so be careful here. The NQ has found balance. It pushed through. It had a weak high on Thursday. It busted through the high and it found an excess high on Friday. Came right back into balance and has rested here. Okay, so the NQ is resting right on top of this kind of area that was created before we were here. We busted through the 121 and went to 144 and rejected that. So to me, the NQ just seems a little bit tentative. It's shy. It's not as strong a new high as we put in the ES on a relative basis. Okay. Crude. So crude has made another run at 79, but crude continues to be in this completely sideways kind of trade between basically 80 and 74. So these are crude's balances. Here's November. This is most of December into half of January, most of January. Okay, you can see that it's skewing down. Crude was skewing down, ended up putting in this low in the 68 handle, and then since then has basically rejected these lower prices. 72 was the sweet spot for crude for the beginning of the year. That's the number we're basically looking for balance in, and that's what we got. And then we basically opened at the low end here on this breakout day, but crude is unable to get out of. So as much as crude looks like it's making a run for the 80, it's really balanced. It's really balanced. So crude oil, to me, is a bit of a sideways trade. So you can see the overnight session here, pretty much, pretty much sideways. It's a balanced profile. We ran down on the open, but we haven't done anything since, and I'm expecting more of the same during today's session. Pretty sweet liquidity check here. But crude to me remains an excellent trade. Again, please trade the MCL, not the CL contract, because it's financially settled as opposed to the physically settled one. Crude has a pretty positive delta, but overall, the skew on crude is negative. What am I expecting for the ES today? I'm running out of time. I'm expecting this to check those extremes. 51.10, 51.12, and 50.92 are going to be the key numbers to look at today. Glad to have you back. We have 1 minute to the open. Good luck today, and I'll catch you tomorrow morning. Take care.